What is going on, Internet? Eric Van Hul's back again with another e-commerce conversations. I hope all is well on the other side of the Internet. On the other side of the Internet from me, Drew. What's up, man?
What's going on, Eric? How you been?
Well, living the dream, living the dream.
Oh, yeah.
Happy Tuesday. It's Tuesday for us,
It is
Friday
Tuesday.
for our listeners.
It is Tuesday.
How you been? I already asked that question before we hit record.
Just rocking and rolling, man. You know, we're cruising along over here, so all is good. All is good.
Yeah. Who the heck are you? What the heck do you do?
I'm Drew. I'm the founder and CEO of a platform called Iris Finance. We work with brands to use AI to deploy agents and automate a lot of their sort of financial and operational workflows. Prior to this, before I became a sleazy salesperson on the SaaS side, I ran a beauty brand called Mad Rabbit for about 5 years in the CFO and COO seat. So that was kind of where I cut my teeth on a lot of this stuff. And then prior to that, I did a couple of years of investment banking.
Yeah. I was there for the early days of Iris. How many years ago did you guys launch?
I think it was it was like almost exactly 2 years. And yeah, I remember it was when Iris was such a piece of shit, and you were kind of helping us out to try to figure out how to get it to work. So this is Eric came to us literally. It had to be the month that we started or something.
Yeah. So that was it's been cool to watch, and you've made that transition. If you do not follow Drew on X, I highly recommend following him on X. He has all sorts of interesting insights in e-commerce, more from a financial perspective. I've been seeing a lot of M&A stuff that you've been posting. How are you running across these deals? Are you just getting alerts on deals, or you got some inside connections who are?
I've got I wouldn't call it a small army, but I've got a handful of agents that kind of crawl the web. So these agents know everything that I've written about in the past. And so they kind of know what I care about, and then they'll surface the stories to me, and then I just kind of pick them from there, and then I just blast it out.
Yeah. What are you seeing in the M&A space? Because you said there's been a few things recently that.
I mean, the last couple of weeks have been crazy. You had, Groons. Obviously, it was kind of the talk of the town last week when Unilever scooped them up for 1.2 billion. The long drink company just sold yesterday to the people that own White Claw. Huel, the meal replacement company, sold for $1 billion to Danone. So I think there's a lot going on. I mean, we can kind of bring it in any direction, but I think at a high level, 2025 was very much characterized by very few very big deals. So you had Poppy and Siete Foods and Simple Mills and a bunch of these other ones. But if you looked at sort of M&A on a cumulative basis, whether on account basis, I should say, of deals, it was actually pretty lackluster. But now you're seeing a lot of deals at all types of price tags kind of coming across the line here. So I think there was a lot of pent up demand for the last couple of years. Obviously private equity raised all kinds of money in sort of the 21 to 23 vintages, and then rates got jacked up, a crazy amount. And so people kind of froze up between 23 and 24. 25, rates were coming down a little bit. And I think there's also this sort of intersection around the actual American consumer and, their habits that really are clearly changing in very meaningful ways. And so when you kind of mix all of that together, I think there's a big sort of, demand for these types of companies from the M&A sort of market, whether it's strategic or private equity. So, yeah, I mean, I think this is honestly the beginning of a 5 to 10 year sort of super cycle in all of this. It's going to be a legitimate recomposition of what major companies care about. Kraft Heinz is breaking up, KDP breaking up, Unilever divesting and acquiring Green. It's a total reshaping of the American consumer economy. It's fantastic. I love being here.
Why do you think it's happening now?
I think I don't want to say that I don't want to say GLP-1 is the only main reason, but I think everyone talks about GLP-1 and how crazy it is. I think it's a little bit crazier than even people kind of tend to internalize. And it's not just GLP-1, but just the sort of health conscious consumer is now at the very, very forefront of the market. And the simplest example of that is literally like Kraft Heinz is a good one where it's like that. Like I'm 28, so like I grew up like Kraft Heinz was like the food in the pantry, right? Like the mac and cheese and the cereals and like all this garbage. And now, the people who are having children are probably around my age, or 25 to 35, call it, and they're not buying like American cheese singles from Kraft at Kroger or whatever. They're being a little bit more conscious, and so I think when you combine the fact with the fact that sort of like our demographic is kind of aging into having more purchasing power and spending more money on having kids, and then throw in the GLP-1 sort of tailwind with regards to protein specifically, honestly. There's just like a lot of things, and Better For You has been happening for so long, but it really does feel like it's kind of accelerated sort of out of, maybe not out of food, but more so into like other areas of the consumer as well. And that's why you're starting to see a lot of these things go crazy.
Yeah, it's Michael, I think it's Girdley, I think is how you pronounce his last name. He's been doing these great like insights into really like brand stories. And one of them was kind of the fall of Kraft mac and cheese.
Oh yeah, okay.
Or specifically mac and cheese, and how like Goodles and Annie's is, no pun intended, kind of eating their lunch right now. And it's kind of interesting. The question is like, there is a drive towards a more health conscious consumer. How elastic do you think the consumer's purchasing power for these things are? Because everything is almost like twice as expensive when you go to the grocery store. Or I mean, I say this as a brand that makes higher end stuff that's
$25 beard oil. Yeah.
So like where is when the rubber meets the road, like eventually where are consumers giving up?
It's a good question. I think like you come back to this idea of like the K-shaped economy, just meaning that like the richer people are the ones like spending more money. So like ironically, the elasticity is, like they'll spend anything. These people will spend anything because relatively speaking, it's very, very little. So like, I think of like I tweet about the IM8 company just because like they're public and their number, you can go through all their numbers. They sell like basically like an AG1 competing product. And, I started buying that product and it's like fucking like $100 a time or something, And so it's like, but I'm not super price sensitive. But like that would be like a crazy purchase for somebody who's, on a different
shops at Walmart.
Yeah. Like, they wouldn't really fathom that. So like, I think it's actually like a good point because people now are like more willing to spend more money. And it just so happens to kind of coincide with their health. So I think that's actually when you ask kind of like, why is it happening now? That's probably like another good reason. Cause like you said, like the Walmart shoppers or whatever, like you're not going to buy a $50 pack of electrolytes there. But these other people, like they're willing to do it, and so like all the brands that we work with on Iris, like the ones at the higher price points are the ones doing better.
Yeah. So like for the listener, my listeners of the show tend to be, let's say, 7-8 figure entrepreneurs, operators of e-commerce businesses. If someone is trying to launch a new product, or pivot in this marketplace, are you seeing more challenge from brands who are trying to be lean on margins and like scale to the mass consumer? Or is, like, as you said, the better option is really going to that high price point and just completely neglecting the price conscious shopper? I
would completely neglect the price conscious shopper because it's a fight that like you don't really want to like be in. Because even if like so you have two choices, or I guess you have three choices, but number one, you can like go into sort of like the mass price point where like you are competing with the folks who have the scale to actually drive prices. It's a race to the bottom, honestly, in that sort of a market. So like if you're like an emerging brand, you're infinitely better off kind of finding like a more prestige niche and finding a product that, like, I mean, your product is a good example. It's like, not every dude with a beard is going to spend the money on your products. The ones who really care about their beard and are willing to spend $30 a pop or whatever it is will. Like these sort of like very pointed, maybe not luxury, but prestige type products. are the ones that are doing the best. And it's like not even, yeah, it's not even like a question.
Yeah. Is it also like leaning in to the health aspect of a product, or what kind of products do you see, or markets do you see out there that have momentum in them?
Yeah, so we do a lot of supplements, a lot of beauty, a lot of apparel, and a lot of food and beverage. So from a categorical perspective, like obviously like supplements is like anything to do with weight loss, anything to do with protein, anything to do with hydration. Calm is also a big one. So like ashwagandha or like valerian roots or like those types of sort of anxiety, not medication, but quelling type ingredients. Like those are all very, very popular. And then from a beauty perspective, like Korean beauty is kind of all the rage in beauty right now. But the better for you also extends to beauty from just like a clean perspective. And you know this, but it's been the truth for a long time. Is clean beauty is people care about what goes in their body and on their body. So I think that's just kind of more of the same, honestly, from the last 5 years. Same thing with food and bev. But then when you think about apparel. Apparel is just finicky because it's just totally trend driven. And like I think there's some like better for you apparel where it's like, non-toxic fabric or like
bamboo or
yeah, it's like I don't really get that, but I think from an apparel perspective it's more just about like what are the styles for the summer kind of a thing. So it's a little bit harder to kind of, triage that one, but yeah.
Speaking of which, Allbirds, did you see that?
I did. I did a big write up about it. Yeah.
Yeah. I'm repeating all the tweets that you've been making, but it was kind of interesting that Allbirds grew to a $2 billion IPO or something like that.
I think it was like $4
billion.
Yeah.
IPO, and then did they sell, or what did they do?
They recently went through like an asset sale. Yeah, it was like they sold for like $39 million to like the American Exchange Group or whatever. Mostly just an asset sale.
Okay. So can you imagine for most listeners, like selling for $40 million has got to feel like a home run, right? A super win. But when you've built a company that at one point was valued at $4 billion, that probably doesn't feel very good at all.
Yeah, and like so in my Substack post, I did like a liquidation waterfall model for like the proceeds or whatever. So like they sold for 39 million. But if you look at the stock right now, I think it's still trading. Yeah, so it's still trading, and it's trading at about 22 million market cap. So that means basically like they have 20 million of like other liabilities essentially, because in the asset sale, like they're buying the assets and the liabilities. So they got bought for 40 million, but in terms of like the compensation that goes to the equity holders, it's something closer to 20.
Yeah. And it's effectively nothing if it was a publicly traded, because I mean, there's got to be millions of shares out there.
Pretty much. Yeah.
So, what are some, walk me through when we were working with Iris, AI was not a word that was uttered. And then in a short period of time, it's kind of come to the forefront of everything. And you're talking about implementing it into your tools. How is AI a function of what your software is doing, and what kind of value are you able to bring to organizations?
Yeah, so we started the company almost immediately after ChatGPT launched, because I was just like, I got to get in on this. Like, this is kind of what I've been waiting for. And you're right. Like at that time, people like used it for like fun, maybe more than anything. I would say in the last like 3 months, maybe it has gone like absolutely parabolic in terms of like the adoption from like our customers and like where they want to and need to use AI. So Iris, the way you should think of Iris is we're the data infrastructure to deploy AI agents. So like we're integrating into Shopify, Amazon, Walmart, Facebook, Gusto, Rippling, bank accounts, credit cards, Bill.com, QuickBooks, like all these different things. We centralize the data, and we stand up a data warehouse with a semantic layer and an MCP server. And what that means is basically we're taking the data and transforming it in a way where it's very, very friendly to be used by AI agents. And then so for our sort of agent layer, The agents that we have are very purposeful with regards to automating finance workflows. So that's why we're like a finance platform. In reality, you could use the Iris infrastructure to create all sorts of agents. We're just choosing to tackle these workflows. So it's things like building out financial models, inventory plans, business intelligence dashboards, cash flow forecasts, like pretty much anything that you would expect a fractional CFO or a internal CFO to do are things that our system can help you use AI to do. Now that's different from like if you just took there's security concerns about the example I'm about to use, but like if you took like a list of your bank transactions and uploaded it into ChatGPT and said like, hey, build me a cash flow forecast, it's not going to do like a very good job. It needs a lot of help along the way. It needs to understand that like, hey, like Bill.com is for inventory and this is your sales forecast. And so that's how much money you're expecting to collect, right? And so you really have to like kind of put all these things together to get the proper workflow. So we're like totally model agnostic. Like I don't like, we use Claude like for the most part now. I mean, that could change in tomorrow. But really we're just focused on like getting all of your financial data in a place where it can be used by AI.
Okay. So also, when you talk about used by AI, is this you're plugging everything in together in Iris? Does Iris also have your own kind of AI wrappers that you're using? Is it the AI within Iris, or is this all this stuff I'm then re-exporting to Claude or Grok or whatever?
We have an MCP server, so you can literally like interface with your Iris data warehouse like via Claude. Like if you just if you connect the MCP to Claude, you can like just chat with Claude and be like, what were my sales yesterday? Or what was my profit yesterday? Or like, how much money did I, send out? Is like anything that you could answer with Iris, you can answer via Claude. So it's a really, really cool use case. And I think there's, an argument in the future, not for everything, but an argument in the future that like everyone's just an API and, it just matters about how good is your data and how good are your benchmarks. And, Iris has a lot of like forecasting outputs. So like we do a lot of like predictive analytics, which LLMs don't do. It's more machine learning. And so those are like endpoints that you can call with a Claude MCP integration. So
what does MCP stand for?
Model Context Protocol. So you should think of it as like just like an API that you're connecting ChatGPT like to Iris, which is connected to QuickBooks, Shopify. And oh, by the way, QuickBooks and Shopify both have values for revenue, but they're different. And so what is the AI supposed to call? Shopify or QuickBooks? And so like those are like the rules in the middle that like Iris is really good at setting, right? And like in reconciling and deduplicating, and that's how you make it like agent friendly. So like that's a good example. Like if you have you could have like Shopify revenue, Amazon revenue, TikTok revenue, and Walmart revenue. And all of those are in QuickBooks, but then you have orders for all of those. And the orders are different than what your accountant is doing for like a GAAP compliant revenue reconciliation or whatever the case may be. And so you just need to really decompose all of those variables and make it basically consistent and callable for any AI agent. Otherwise, you're going to ask an agent like, hey, what was my sales yesterday? And you're going to ask 3 times and you're going to get 3 different answers. And that's like hallucination, right? So it's all about controlling the hallucination.
Yeah. So how... I'm a pretty dumb guy. I think I uploaded an Excel spreadsheet one time to ChatGPT and, asked it to do some kind of work, and it just like started making up numbers and and I'm like, I can't trust. At that point, I couldn't trust AI for any kind of financial or crucial financial kind of.
Dude, the craziest part though, there's a lot of people who will do that and they'll just get lied to. But they don't even like care. Yeah. They don't even know.
So I mean, like, yeah, I mean, how do you, what are some best practices? I assume there's still going to be some hallucinations, even if they're pulling in like really clean data. What are some best practices to ensure you're validating the information that it's giving you?
Well, you have to have the component variables, right? So what I mean by that is like, if you connect Claude to the Iris MCP, and you ask, what were my sales yesterday? And it says $100,000. Then you can say, okay, show me the orders that make up that $100,000. And it'll give it to you because Iris has those orders. Not everybody has the orders. So pretty much every other software in this ecosystem, instead of calling all the orders from Shopify, they'll just ask Shopify for the sales number. They'll say, hey, Shopify, what was sales yesterday? Shopify says 95,000. Iris says 100,000 because Shopify is deducting returns. So you have 5% of returns, and they're deducting that from today's revenue, despite the fact that it was increased on the day's revenue when the order was actually placed, right? So if somebody bought something a month ago, sales went up a month ago, but they return it today, and Shopify makes sales go down today. What Shopify should be doing is making sales go down the day that they bought it, right? And so Iris can give you all of the orders and like the order level reconciliation to say, hey, here is why yesterday's sales were $100,000, no questions asked. And so it's all about basically data validation and being able to support the numbers that you're getting. Like I couldn't tell you how many times. It's honestly our biggest problem as a company is people will see numbers in Iris that are different from numbers in Shopify or Lifetimely or TikTok or like whatever. And they're like, oh, why does Triple Whale say this or whatever? And I'm like, Triple Whale is not right. I don't mean that specifically about Triple Whale, though. That's a great platform.
XYZ competitor.
XYZ, whatever. Because like you could look at 10 platforms, they're all going to have different numbers. The question is, which platform can prove the number to you? That's what you want to know.
Yeah, and then when the feds come by with an audit,
dude, it's not even like a joke. Like literally, that we have a company that was doing like 80 million in sales, and their accounting team was booking sales tax as part of their revenue. And they look at I think they're on like NetSuite or something, and they look at their NetSuite and they're like, why is Iris's sales so much lower than NetSuite sales? And we're like, dude, your fucking accounting team has been booking millions of dollars of taxes into revenue. Like, we're not wrong. You're wrong. And like, yeah, like, that obviously would not pass an audit. And like, it sucks for him because he thought he was making, I don't know, like a couple $100,000 a month more in profit than he was, but he wasn't.
Got to pay those taxes, man.
It's the tax man, dude. AI has not solved taxes. Once we get like AI tax evasion, then we'll be rich.
What's the word you use? Not evasion.
Optimization.
There you go. There's avoidance, tax avoidance. Versus evasion, where you're not fraudulent with your behavior. You're just trying to avoid as many taxes as possible.
Optimization. You're for the shareholders. You're maximizing shareholder value.
Yeah, there you go. So how are people best using Iris? What are they? Obviously, they're plugging it into Claude, but I can't imagine they're just like, hey, Claude, tell me the sales for the day. Like, what are the best use cases for the tool that will really maximize and bring value to an organization from a financial standpoint?
I think like lately, the biggest thing that we're able to help people with is answering. This is going to sound silly, but answering the question like, what should I spend on CAC? Given all of the other variables in my business, which are my gross margin, my channel mix, my OpEx, my cash balance, right? Basically, like what kind of CAC should I be willing to spend? And okay, so like let's say somebody asks us that, and we say, hey, you could spend at a $60 CAC, $70 CAC, or an $80 CAC. Here are the trade-offs of each of those decisions, right? From a unit economic and profitability perspective. And so I think scenario modeling is kind of like the shortest way to say it. I think is what we do a really good job of right now, where people, they don't really know what their LTV to CAC is. And we can show them, hey, like if you did this, you'd make X dollars more than you are right now. So definitely that, and then also I think helping people understand and what I'm doing is what I'm doing profitable. So like I just launched on Amazon. I'm doing a lot of sales, but Amazon's got a lot of fees, and it's a lot of accounting work to kind of understand those fees and your true margin. And many accountants will get it wrong. So, on an accrual sort of contribution margin basis, like, is TikTok profitable for me? Is Amazon profitable for me? Kind of giving visibility. That's why we call it Iris, because we're, trying to give you visibility into all the different areas of your business. So it's all about like basically diagnosing unit economics, then trying to help businesses scale the right way, honestly, because scaling the wrong way is wrong.
Yeah. And what kind of volume do you need to be at for this data to be pretty accurate, where you can feel pretty confident that, hey, if I up my CAC from 70 to $80, that it's going to drive this kind of increment out.
Volume, you just mean like in terms of like how big is the company?
Yeah. Because I imagine like if you're doing, let's say you're doing like $3,000 a month, right? That data is just going to be so volatile.
Yeah.
With what you're spending and what you're producing. So I would imagine at a certain point, you'll never be 100% there, but there's that curve, that S curve, where you really start to dial in, the blended amount, what you're paying for your customers, what is driving. Is that like a 7-figure business? Is that a $5 million business?
I think 5 to 10 is kind of the lowest end of, this is just my opinion, kind of like where that's your principal issue. Until 5 or 10, like your principal issue is just that like you're not at 5 or 10. But then at 5 or 10, it's like, this is a real business, and we should really start to think about how to make it make money. Like if you're only doing a couple million, I think it's just really hard to support infrastructure of a business kind of at those revenue numbers. I mean, you can obviously do it. It just depends like what your goals are, right? I mean, like there's plenty of people that are running awesome couple $1 million a year businesses that they probably make more money than a lot of the big guys do.
Yeah, I mean, I think there's for a company that scales, very quickly you lose control of your finances.
Totally.
Like when you go from running a business and you're a solo founder, you're buying the inventory, you're doing the marketing, you're doing the customer service, the returns. Like you just have a full grasp of everything in the business. Yeah. You don't need any systems, any processes. Like your gut feel is everything.
Yeah.
And the minute you start making those hires, even when you have a team of 4, an ops person, a marketing person, customer service person, then all of a sudden, like you really don't know what's going on in whatever the category is that you don't focus on.
Yeah.
And then it becomes a trust issue. You're like, do you really trust the data and the information you're seeing? Or are you relying to information that's not timely or relevant? I think is another issue that you could be coming into. You're not doing your books, but once a quarter,
yeah, I think
once a year during tech season.
And it gets just like worse and worse from there. Like Matt, I think by the time I had left Mad Rabbit, we probably had like, I don't know, dude, like fucking 20 maybe not 20, maybe like 10 sales channels. And, Walmart, CVS, Urban Outfitters, Shopify, Amazon, TikTok, whatever else. We sold into literally like tattoo studios, like the parlors. And how many advertising channels did we have? Maybe 20 of those, So it's like, just the bigger you get, the tougher it becomes to, like you said, sort of understand, like the gut feel like goes away because there's so much stuff that you just don't know about and you can't.
Yeah. You mentioned getting into like retail channel. How does that work with Iris as well? Are you able to plug in with? Yeah,
we integrate into basically all the retailers. So Target, Walmart, Sephora, Ulta. We have an SPS commerce integration as well, which is like an EDI system used for more of like the sell-in data. Whole Foods. Grocery, we do a little bit less of, I will say. It's a big focus of ours kind of in the near future. But yeah, I mean, you just connect it and it kind of shows you like in retail, like what people care about is sell through, like velocities, right? So there's a bunch of analytics that you can do in terms of like, when I increase my TikTok spend in California, do my California stores perform better? Like those are the types of analyses that our customers are doing.
Yeah. And is that data coming in from like when we're no longer in Target, but if we wanted like Nielsen, was it?
Yeah, exactly.
Nielsen ratings, we would have to purchase it. Is that something that you have paired in with your inventory?
We obviously don't buy it on your behalf, so you have to have it. Okay. But then once you have it, it's very easy to just like either upload it or we can build out like a small. Like we integrate with like Google Sheets, like a lot of people have stuff in Google Sheets. There's a couple different ways you can do it, but yeah, it matters for mostly for inventory planning, I would say, for demand planning, and then a bunch of like analytics type stuff.
Speaking of inventory planning, guessing the future is always impossible. So like how do you guys help operations teams predict and understand the inventory, kind of the velocity you're moving through with inventory to ensure you don't have too much and don't sell out?
Yeah, so our inventory plans are downstream of the demand plan. So what that means is we want to use all the tools available to us to try to predict how much sales are you going to do. So like, let's say you're going to do $20 million in sales. Okay, great. Let's say for the sake of simplicity that all of that is direct to consumer. Then we're going to look at like the historical mix of your products, either seasonally or on an aggregate basis, and just do a pretty basic mathematical model to model distribution around, hey, the beard oil is 15% and the balm is 25%. And, and then honestly, it's just divided by ASP equals units. And then that's the model. I will add that we have a lot of data on Iris. So these are like more machine learning models that we're talking about, not really the LLM stuff, but we have a lot of data on Iris. And so our ML has the privilege, I should say, of accessing a lot of information. And so, what's value add about our system is you can come to Iris and you can say, hey, I'm launching into Ulta in 3 months and I don't really know what to expect. Well, it's good news. Iris knows what to expect from a brand at your price point with your types of customers going into these Ulta stores, right? So we can say, hey, here's the expected velocity. Here's how it's going to change in December versus July, and here's how you should plan your inventory accordingly.
Yeah. Will that past projections or past data analysis take into consideration like out of stocks in periods of time where the product was not available?
You're asking like at the individual brand level?
Well, yeah. So like from a demand tracking, say we're going to do 20%, historically speaking, this product does this amount. But last year we were out of stock of it because of the tariffs or whatever for.
Yeah, if it's like statistically anomalistic, it'll get ignored. Yeah, but okay. It's a good question. It's one of those things where like you'd want a human to probably review that with you.
Yeah. I think there's that's always been my thing with business is I forget all the times that we did everything. Or if we had a product launch, and it was a big month, it's like, oh, it was a nice month now, but
yeah.
A product launch that everybody launched or everybody likes. I think it's kind of like it's like a flashlight. It'll help brighten it up, but you still have to get closer and really look at the stuff to understand.
Yeah, and I mean, like it's same thing goes with like product launches. As far as like we're launching a new SKU, we can use all the data in the world and say, hey, we think that based off of the type of product and your type of brand that this is going to be how fast it's going to grow. But at the end of the day, you have one meta ad that takes off and it changes everything. So, there are things that computers just will never know.
Yeah. You just got to live life, man. That's part of the journey.
Yeah. You just got to get rocked every once in a while.
Yeah. That seems to be more common case is getting rocked rather than the opposite.
But if we could help you get rocked like one less time every like 2 years, it's like totally worth it.
Yeah, totally worth it. Where can people follow you, reach out to you, get some good insights?
Drew Fallon 12 on Twitter. I do a lot of posting on LinkedIn as well. I have a Substack too, a newsletter, drewfallon.substack.com. So yeah, I'm pretty responsive. If anybody wants to shoot me a DM, or my email is drew@irisfinance.co. Can't afford the .com yet. Working on that.
You'll get there. And then it's irisfinance.co is where to go to check out stuff.
Yep.
Sweet. Well, I enjoyed having you on the show. It's good to see you again. It's been too long. My,
always a pleasure.
Former Balm producer.
Yeah.
As always, thanks for listening. Cheers.
All right. Appreciate you, Eric.
Keep on growing.